from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it's a bird, it's a plane, maybe it's a JOBY air taxi. The Uber-backed aviation company that promises a commercial fleet of flying cars by 2024 has hit the public market via SPAC. We will bring you our conversation with SPAC sponsor and board member Reid Hoffman. Plus, crypto trading platform FalconX has more than quintupled its valuation in 5 months to $3.75 billion, where the CEO says the new funding will go as Bitcoin takes another leg up. Does he think it's going past the moon, too? And conflicting virus views. California will require that all teachers get vaccinated or undergo weekly testing, while Florida Governor Ron DeSantis doubled down on his no mask mandate policy. Controversy roiling school districts as kids across the country go back to the classroom. Meantime, to our top story, think Tesla meets Uber for the air. JOBY Aviation believes flying taxis are the future. The company is developing an electrical aircraft that'll take off and land vertically with a pilot, taking up to 4 passengers to nearby destinations with 0 operating emissions. Earlier, my colleague Guy Johnson and I spoke with JOBY Executive Chair Paul Sciarra about the vision and the challenges that lie ahead.
Folks sometimes think about this as a sort of Jetsons future where everyone will have one of these parked on the tops of their rooftop or in their driveway. That's really not how we think about it. We really designed this aircraft for aerial ride sharing. So think like Tesla meets Uber for the air. So this is an aircraft that will be an on-demand service, and we've already got opportunities to basically tie together the ground transportation to and from your flight, where we're flying the long-distance, high-value portion of the trip.
How will JOBY really reinvent transportation and scale this up?
Yeah, so we designed this aircraft to really be suitable for any trip between 5 and 150 miles. So it's not just trips inside of cities. Sometimes this category is called UAM, and we don't really love that. We think about it as not only the trips inside of cities, but also connecting cities to suburbs, or in some cases, cities to nearby cities. So this is really a new mode of regional transportation that we think can be safer than driving on the ground, certainly faster, and then just as affordable as ride sharing today.
Paul, where are the challenges? You've got a certification challenge, you've got a scaling challenge, and then you've got a kind of skyports, where are you going to build these sort of things challenge as well. Can you kind of walk me through how you're going to solve all of those and which ones represent the biggest challenges you're going to face going forward?
Sure. So this is a team that's already been working on this problem for the greater part of a decade. So we're certainly not new to the challenges that this industry faces. And I think what we've shown is that the technology is ready. The aircraft is performing exactly as we intended, 150 miles on a single charge, with a noise profile that's as much as 100 times quieter than helicopters today. We think both of those are really important in terms of delivering a service. But you're right, there are other challenges as well, certainly certification and scaling up manufacturing and service. And frankly, one of the exciting things about today is it's really an opportunity for the company to pivot from a research and development focused organization to one that's squarely focused on commercialization, meaning executing on the certification plan with the FAA, showing that we can repeatably produce these aircraft at scale, and then third and finally laying the groundwork for certification.
In terms of that certification, I've heard you talk about this before. You sound pretty positive. My question is, how much weight is the FAA going to add? They are clearly going to be cautious about certifying these aircraft. You talk about a 150-mile range. Do you think the FAA is going to put extra weight into the aircraft, and do you think that's going to affect performance?
So we've been in conversations with the FAA for a number of years, and in a formal certification process for 2 already. So the certification challenge isn't one that's brand new to this company. We actually received a really important milestone in that effort just last year with our receipt from the FAA of what's called a G1 issue paper. So this is the sort of roadmap, the series of tests that we need to do at the component level and then at the vehicle level to prove the safety of the aircraft and get type certification. So we now know exactly what we need to do. It's just a matter of doing it. So I don't expect that there's going to be any further hiccups in the process. It's really just about our own execution.
Now, Paul, we seem to be one step closer to point-to-point space travel with the successes we've seen from Blue Origin and Virgin Galactic on these short trips to space. Elon Musk has this vision of, commercial hypersonic, super fast travel, New York to Shanghai in 40 minutes. What do you think about visions like that?
So it's really exciting to see a bunch of big, ambitious industries sort of being taken on in new ways. And I think there are sort of interesting analogies to some of the work that's happened in ground EV with electrification of vehicles, certainly some of the things that are happening in space, and some of the work that we're doing here. So in all of those cases, the incumbent players really were delivering incremental innovation for a long time. And we have had an opportunity through deep vertical integration to really do something that's different than traditional aerospace has done. And we think that, frankly, this is like a problem that startups are well equipped to solve. It certainly takes a lot of people and it takes a lot of capital, but we can sort of think about it in a really different way than other folks, and I think that that's going to position us well as we kind of go into this next stage of the company and commercialization.
So who's going to be taking the first commercial flights? Are you going to be running auctions as well?
Yeah, so we've always designed the aircraft to not be something that's exclusively for the wealthy in the way that helicopters, say, are today. So everything about the aircraft, the speed, the capacity, the charge time to really minimize the amount of time that the aircraft spends on the ground was all to get to a price point that started affordable and could get increasingly affordable over time. So first year of launch, think about it as the cost of an Uber Black, and then by only the second or third year of launch, really the cost of an Uber X. So this is something that we think can be affordable and accessible to large numbers of people.
Paul, you mentioned the charging time. What is the turnaround time of the aircraft?
So on a single 25-mile trip, we can charge back the energy that we use in just 5 to 6 minutes, basically the time it takes to load and unload passengers on the other side. That was actually one of the real challenges in terms of the battery system and the powertrain on this aircraft that we've had a big team working on for a long time. So we're really pleased that we were able to get that because it's really the utilization of the aircraft that drives the underlying economics and allows us to charge the right price point that is, as I said, affordable, accessible to lots of people.
Now, you've been working on this, Paul, since 2009. The fleet won't be fully ready for a couple more years. Why SPAC now? And what's going to happen between now and commercial flights? Why is it going to take so long?
Well, look, building a new aircraft and certifying a brand new aircraft, that's a hard challenge. And this team has been at it for a really long time. I think the decision to go public now was really because we felt we were ready. The technology was ready, the path through certification was increasingly clear, and we saw this as an opportunity to obviously raise capital to fund the next stages of development. And that's really simple. It's three things: executing on certification, showing that we can repeatably produce these aircraft at volume, and then third and finally, laying the groundwork for initial commercial launch. And we've got a number of milestones over the next 6 quarters that are really geared to each of those 3 goals.
JOBY Aviation Executive Chair Paul Sciarra there. JOBY shares closing up more than 33% on the first day of training. I'm going to speak to Reid Hoffman, who of course sponsored this SPAC, later this hour. That in a moment, but first, let's get a look at the markets with our own Kriti Gupta. Kriti, walk us through the rest of the day.
Absolutely, Emily. It was all about that inflation print that you saw this morning. The market actually relieved that you didn't see that sky-high inflation. The first data print, first inflation metric that didn't surprise to the upside, all the way dating back to March. And you can really see it here. The S&P 500 up 0.3%. A very sector-wide kind of gains that you saw today. Tech, though, not on board. Big tech, semiconductors, not feeling it. And you did even see some money go into Treasury. So people just not so hot on tech right now. But we have to talk about Bitcoin because when risk sentiment is high, Bitcoin tends to be higher as well. And this is really going to be crucial because we know Bitcoin has been under so much pressure lately. And you have really seen that. But question is, can that rally continue with the bump that you're seeing over these last few days? Compare this to what you saw in 2015 to 2017. The rally looks pretty similar. So if history is any indication, Bitcoin has some room to run. I want to end with some of those earnings stories that we're getting out of the bell, going from macro into micro. Let's just kick it off with eBay, missing their third quarter forecast, but expanding their buybacks by $3 billion. So you did see shares up after hours up by 4%, but it looks like those earnings are really weighing on investors now. Once again, down 1.2% after hours. And I want to end with Bumble beating their sales estimates, beating their revenue forecast as well. Good news there, 1.4% after hours, Emily.
All right, Kriti Gupta, thanks so much for the roundup. Meantime, Google employees who choose to work from home could reportedly see their pay cut by up to 25%. According to Reuters, the search engine giant is offering an internal salary calculator that shows if you have a long commute, you might earn less because pay packages are determined by location and local market dynamics. For example, a Google employee living in Stamford, Connecticut, who works in New York City, would be paid 15% less if they choose to work from home. A colleague living in New York, in Manhattan itself, would see no pay cut. All right, coming up, crypto platform Falcon X is now valued at $3.75 billion. I'll speak with co-founder and CEO Raghu Yalagada next on the future of regulation surrounding crypto and competition in the space. That is next. This is Bloomberg. The crypto platform Falcon X has more than quintupled its valuation in the last 5 months. This, according to CEO Raghu Yalagada, who now says the company is valued at $3.75 billion, with customer transaction volume reaching $10 billion. Joining me now for more, Falcon X co-founder and CEO Raghu Yalagada himself. Raghu, thank you so much for joining us. It's good to have you back. So talk to us about what makes Falcon X so special, what sets you apart from other exchanges, and who do you see as the competition?
First off, great to be back, Emily. Thanks so much for having me. In terms of what Falcon X is, we are an institutional one-stop shop. I'll parse both those things out. We serve a very diverse set of institutions, all the way from the world's largest hedge funds, payment processors, retail aggregators, venture funds, family offices, asset managers. For this diverse set of institutions, we give them everything that they need to navigate anything that they need for digital assets. Specifically, we help them with their trading needs, aka how do I get really good pricing? We help them with their credit needs, the ability to wrap delayed settlements and things like that around their trading needs. So, and we offer this in a variety of different form factors. We give our customers in the form of web applications, APIs, and also the white glove desk, which is 24/7. The biggest differentiation to your question, Emily, is the pricing. We are not just connected to one exchanges, we are connected to over 100 liquidity venues, 40 of which we work very actively. And our goal is to filter out really good pricing using that layer of machine learning that we built to make sure that you get really good pricing across trading and credit.
You lock pricing for 5 seconds to minimize volatility for your clients that are trading, which seems to be a fairly long amount of time. Why do you do that?
Now, that's a fascinating point. For some of our clients like payment processors, Emily, it is very important that the price be stable for a period of 3 seconds, 5 seconds, or 7 seconds based on their platform needs. Why? Their retail customers are not used to the volatility on crypto. They want to see a stable price so that an Emily can make a stable decision around the price. So for that reason, they ask us for the impossible. In a market that's moving very volatilely, can you give me a price that is locked for about 5 seconds? So what we do is, the first leg of it, we aggregate liquidity from a variety of different liquidity pools, exchanges, OTC desks, market makers, miners, and then we apply a layer of machine learning on top of it to figure out how do we pad the price so that we get that stability over a period of 5 seconds without taking any directional risk as a technology platform. And that customization is extremely important for our payment processors and ultimately their end customers to get into crypto much more seamlessly.
Now, the crypto industry, it seems like almost everyone we talk to not happy about this new infrastructure bill and the language in it that will lead to potentially broader restrictions and regulation on crypto. Take a listen to part of my conversation with Coinbase President Emily Choi, her thoughts on this new legislation.
This was a setback. There's no doubt about it for this past week, but we're playing the long game here. And we think that the more education Coinbase and other members of the crypto industry do with lawmakers to help them understand the potential for crypto, the more we can shape the right regulation that kind of helps make sure we're protecting customers and at the same time, not inadvertently hindering crypto innovation from happening in the US and moving it offshore.
The CEO of Kraken earlier also told us the legislation was a disaster. Raghu, what do you think?
First and foremost, Emily, the amount of limelight that it's bringing to crypto is just incredible. It's making the asset class mainstream. So that is number one. Number two, for players like FalconX, we have the tools, we have the know-how, we have the technology to make sure that we're compliant with every major variation that's in the amendment. But it's bigger than FalconX. For me, what is really important is the software developers and miners. An analogy can be drawn to the early days of internet. If you put the full weight of the tax law on a average Joe who's building a website in the early days of internet, the innovation could have been stifled a lot. And that is a very similar thing that's being proposed here, meaning we'll bring the entire tax code to a software developer or a miner who may not be even able to have the resources to basically comply with anything like that from a technology standpoint. So definitely, I think it should be much more specific and much more nuanced. There's no question about it. But as Emily from Coinbase pointed out, it's about education. What we're seeing is like lawmakers willing to understand the nuances and make sure that the legislation lands well, because US is really leading the way here.
All right, Raghu Yarlagadda, CEO of FalconX, thanks so much for joining us. Obviously, I'm sure this debate is going to continue. Meantime, in more crypto-related news, thieves have given back about half of what was likely the largest cryptocurrency hack yet in the DeFi space. In a bizarre twist, hackers returned about half of the $610 million they stole earlier this week from DeFi protocol Poly Network. In return, they're asking for donations as a reward for their kind act, so far netting just $200. Coming up, a crackdown on vaccinations and testing in California schools as Florida Governor Ron DeSantis doubles down on a mask mandate ban. We'll bring you all the latest out of the new COVID-19 front next. And as we head to break, I want to take a look at Deliveroo, the London-based food delivery service reporting a surge in revenue and orders in the first half of the year, a sign people are keeping their habit of getting food delivered even as economies reopen. The company saying revenue jumped 82% in the first 6 months. This is Bloomberg. Tensions between the White House and Florida over Governor Ron DeSantis' handling of rising COVID cases continues. An ABC News affiliate reported earlier this week that the Florida Health Department requested 300 ventilators from the federal government, a request DeSantis said he was unaware of. White House Press Secretary Jen Psaki expressing some skepticism.
I would note that as a policy, we don't send ventilators to states without their interest in receiving the ventilators. I think the most important question here is why would you oppose receiving ventilators?
Governor DeSantis has attempted to block school districts from imposing mask mandates on students, saying parents should decide whether their child wears a mask to school or not. This comes the same day California became the first U.S. state to require that all teachers and staff get vaccinated or undergo weekly testing. Let's bring in Bloomberg's Max Neeson for more. So, Max, these renewed mask mandates in California and vaccine mandates, even as Governor Newsom is facing a recall, so certainly a bold move. Do you think we're going to see more of these across the country?
I think that's quite likely, given the risk that the return to school poses, combined with the highly transmissible Delta variant and still lagging vaccination rates in too many parts of the country. The best thing that we can do to keep schools safe is to have as high of a vaccination rate as possible around the subset of the population that still can't get vaccinated, and to supplement that whenever possible with masks. It's just the reality when you have the level of community transmission that we currently do, and I'm hopeful that more states will follow in California's lead.
Well, one of those states will likely not be Florida, with Governor DeSantis doubling down on the no mask mandate. Meantime, you've got some of the school administrators there pushing back hard, saying they're there to protect families, to protect children. Is the governor's stance here contributing at all to the surge that we're seeing in Florida?
I think it absolutely is. It's the sort of continued politicization of public health, taking, an evidence-based recommendation, one that's aimed at keeping kids and their families safe, and turning it into, a question of freedom or politics, when it should really be about what matters most, which is just trying to keep people safe in a particularly dangerous moment of a still dangerous pandemic, particularly in Florida, which, is having surging hospitalizations. Just, taking this particular stance at this moment is just wildly irresponsible.
Meantime, Moderna has doubled the size of its COVID trial for kids. We just had Moderna co-founder and chair Noubar Afeyan on the show, and I was trying to get some sort of timeline, a more specific timeline, when vaccine for kids might be ready. Do we know anything more?
It's pretty hard to tell. The FDA did request this increase in the number of people in the study, just trying to get a more complete view of safety and efficacy, because it is, was a relatively small number of people. The question is whether they're going to want to wait for, a full few months of data from this new cohort, or willing to base the decision based on largely, people that are already in the study. If it's the latter, then we may get, faster results and faster approval. And I'm hopeful that that'll be the case, because this is, a really large population that is at increased risk. In particular, we don't necessarily know whether the Delta variant is more severe in kids, but we do know that because it's so transmissible and so widespread in the United States, that they're much more likely to encounter it. So those rare bad outcomes are more common just because of the sheer number of kids getting infected. So, hopefully that process will be speedy, but also, of course, cautious in the ways that it needs to be in terms of getting a good sense of the safety in this population.
And quickly, what about Pfizer? I mean, the expectation is that that would come sooner than Moderna's, but when?
Yes, just because, they got a little bit of an earlier start. We'll see whether that's actually the case, or whether the FDA will end up wanting additional data from them too. Still sort of too early to tell.
All right, Bloomberg's Max Neeson, thank you so much for your analysis and those updates there. Appreciate it. Okay, coming up, all eyes on Texas as Amazon-backed EV startup Rivian eyes the Longhorn State to build one of their newest car factories. We're going to have the latest on that scoop next. Plus, later in the show, we'll be speaking with Greylock's Reid Hoffman, whose SPAC just took air taxi startup JOBY Aviation public. We're going to have more on the future of urban and aerial transport ahead. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get straight to a recap of the markets with Kriti Gupta. Kriti, what else are you following?
Emily, it wasn't such a hot day for tech in the markets today. A completely different story when you look at the numbers year to date. Check this out. You have the New York Bank Index up almost 13% since the start of 2021. Of course, when you see big tech outperform, you see semiconductors outperform as well. Here's what didn't do so well. Those Chinese ADRs still not able to make up for some of those losses that you've seen for months now, down 26% on the year. And when we're talking about some of these kind of asset classes, where do you invest to kind of hedge against things? We have to talk about Bitcoin in particular, because that's what's been driving the tech trade. Is it driving the Bitcoin trade as well? Well, some people would say it's not. Bitcoin is not a hedge. But some people would say, well, take a look at this latest bounce. As we're talking about the Fed, as we're talking about inflation, it's starting to come up, going above trend. Could that signal it has some more room to run, some more bullish drivers? So that's, of course, on the macro level. While we're talking about tech, I also want to talk about electric vehicles very quickly. Let's start off with the intraday action today, because the Drive ETF, which really holds any tech name that's involved even remotely with the development and creation of electric vehicles, up on the day. But if you look at those three major names, Tesla, Plug Power, and the Nikola, actually down on the day. So there is some sort of regional difference here when we're talking about electric vehicles. U.S. EV not doing so well. Look abroad, EV's doing great, Emily.
All right, Kriti, thanks so much for that roundup. Meantime, Amazon-backed electric vehicle, startup Rivian is in talks to invest at least $5 billion to build a factory near Fort Worth, Texas. Bloomberg has learned the factory would be designed to produce 200,000 vehicles a year and would create at least 7,500 jobs. For more, I want to bring in our very own Ed Ludlow. Who else? So this seems like a big deal, but is it?
It is a big deal, but it's the early stages. You know, we learned a lot through Tesla's process with Austin that it takes time. The companies are often talking to a number of states and cities at the same time, trying to get the best package of incentives. So this is just what the city of Fort Worth is offering Rivian. As you said, a minimum $5 billion investment from Rivian, 7,500 jobs by 2027. And then in return, the city of Fort Worth is offering them tax breaks, tax abatements, grants of $440 million. The next stage is to go to the state and the county and get even more.
Why Texas? I mean, obviously, we know Tesla and Elon Musk has moved to Texas. So what's so special?
Yeah, it's interesting. Sources are telling me that this site in Fort Worth is now the front runner for Rivian, and that they were previously looking at Arizona, but they were a little bit concerned about the infrastructure that was available in that state. Texas has good infrastructure. It has roads, it has ports, good access to talent. It's close to Mexico, where a lot of the automotive supply chain is. But it's still just one front runner in a large pool that they're still talking to.
So you and I talk about Rivian all the time. You know, I have friends say, I want one.
Right.
When can I get it? And you say to me, they have to wait 3 years. So they haven't produced a single vehicle yet, right? That's on the road.
Right. We give Rivian so much kudos because they're backed by Amazon. They've raised $10.5 billion. They have all these investors. They have a fancy factory in Normal, Illinois. But they're behind schedule, and they've delayed a ton of times, citing COVID, citing supply chain, citing semiconductor shortage. We had this tweet from Elon Musk, right, who's straight to Twitter after this news breaks to say Rivian should be concentrating on its existing factory, actually starting production before they worry about the next one. You'll remember that I broke the story in February. They're already talking about a UK or European plant, but they still need this one going.
Why are they getting ahead of themselves, or are they?
I think they've grown so fast, so quickly. You know, a couple of years ago, they were just a couple hundred employees. They're now 7,000. They have these massive plans. They say they're supply constrained, 100,000 delivery vans for Amazon, getting ahead of themselves a little. But remember that old adage that Elon Musk repeats all the time, production is very hard and prototypes are easy.
So what is next?
I don't know. Well, they're going to negotiate. I'm told by sources that this is a few weeks away, if not months. They will look for the most incentives they can get and then make a strategic decision. And by the time they get to actual production of their existing factory, you know, maybe someone will get you one for your birthday, Emily. Happy birthday, by the way. What a nice present that would be, an electric pickup. Yeah,
but I'd have to wait 3 years, right?
Right, supply constrained.
Thank you very much, Ed. Good to have you here. Good birthday. Thank you. Ed Ludlow there. Okay, coming up, Greylock Partners and LinkedIn co-founder Reid Hoffman betting flying taxis will reinvent transportation. We're going to speak to him about JOBY Aviation's sky-high ambitions, their path to going public, and when the life of the Jetsons becomes reality. This is Bloomberg.
This is really a new mode of regional transportation that we think can be safer than driving on the ground, certainly faster, and then just as affordable as ride-sharing today.
Part of my earlier conversation with JOBY Executive Chair Paul Sciarra on the future of urban air travel and how he's hoping JOBY will transform our commutes and much more. The company going public today in a SPAC deal with reInvent Technology Partners, at one point climbing close to 40% above its opening price of $10 a share. For more, I want to bring in Greylock partner, LinkedIn co-founder, and reInvent Technology Partners co-lead director Reid Hoffman, who's also on the board of JOBY Aviation. Reid, so great to have you back with us, and obviously a strong debut there. You're sponsoring a few SPACs, but you could sponsor almost anything if you wanted to. Why did you pick JOBY?
So JOBY has the amazement of, a little bit like your earlier thing, of the Jetsons now become real, of moving urban transport from 2D to 3D. It's Uber meets Tesla in the air. And that can transform space, people's commutes, stop gridlock, and have that not have the climate impact. And to do all of these things in a way that make cities healthier and more fun and more ability to get around. And so that kind of redefinition of transport, of networks, has been one of the things that I've actually been doing over the last 5 to 7 years. And so while I originally hadn't thought about the third dimension of space, I did actually, once I saw it, said, oh, this is a new network. And networks are how we transform our work, our experiences. And so this, networks, I understand.
So we've all imagined that Jetsonian future when we're stuck in traffic or we have a long trip ahead of us, but we're not quite there yet. And I wonder, is this realistic for 1 billion people? Like, how does this scale? Does it really reinvent transportation or just augment transportation?
Well, I think reinvention is in part also augmentation. You'll, of course, still have ground cars. You'll be moving heavy things around. There'll probably even be, various forms on the passenger side. But the reinvention means that what previously was configured by geography, think about, the flight to the airport, or or the drive to the airport, or think about, kind of getting around things. Now, it's just literally the 3D of potentially getting there. And that, emphasizing people and the fact that moving people around is really key. So I think that kind of reinvention, is the same kind of reinvention that when we start doing plane travel, of reinventing space, that all of a sudden now, across the Atlantic, across the Pacific isn't so far away. The fact that you could live a little further out and kind of make that work. Like, all of those things are the kinds of reinvention. Then, of course, the climate change and because of the sharing model, the accessibility to everybody as part of it, as Paul was talking about.
So let's talk about that. The Uber plus Tesla in the air metaphor is so vivid. Is the pilot a JOBY employee? Is it a contractor like an Uber driver is? And is that really the best labor model at this point? It's a company that's still not profitable.
Well, we have to actually get the service going. JOBY is the first to have a G1 paper with the FAA, and the only eVTOL to have a G1 paper agreed on how certification will work. It's flown a prototype vehicle over 150 miles, over 1,000 test flights. So it's real. You can see it actually, in fact, flying. It's not a design. It actually has a pilot doing it. And so I think one of the things that will, I think we start with having a pilot in the vehicle even before, like, autonomous vehicles, to maximize safety and understood and learn from it, because a combination of, obviously, it's safety, and then ease and kind of a good impact. So I think the labor market will be fine. One of the things that JOBY did is they actually figured out a fixed wing a certification. So it's a broad range of pilots who've been trained, who only need a little bit of an additional cert in order to be able to fly them.
So, you're also sponsoring a SPAC for Aurora, the self-driving car company. Between air taxis and self-driving cars and point-to-point space travel, which we've seen some progress in with Virgin Galactic and Blue Origin of late, what's your vision of how all of these different kinds of transportation fit together, let's say 10, 20 years, or I don't know, 50 years from now?
Well, it's kind of funny because I've kind of found myself just by thinking about networks kind of doing all of this reinvention of transportation. And obviously, autonomous vehicles will be key for increasing safety, decreasing costs, making the network as a platform for all of this. Aurora is obviously, led the Series A for Greylock. And Chris Urmson, who I sometimes refer to as the Henry Ford of autonomous vehicles, was the technical lead for building Waymo, and this is kind of the rebuild of it. And I think that what we're learning is that the central networks in human life, right? Obviously, we have the internet, but also transport are key to people's lives, to commerce. And so, what are the reinventions that then enable all of this new productivity on top of it? And so autonomous vehicles, both the kind of passenger, but also trucks for shipping when it gets to Aurora, all of these things are things that we have line of sight. We can see them. Like they're in Aurora, it's down the road. In JOBY, it's in the air. But we can see that invention happening. It's just a question of getting there.
Do you see no pilots someday or autonomous taxis, or is that just not in the viewfinder yet?
I think it's in the viewfinder, but it's with a safety first. It's in the viewfinder past doing it with the pilots. I mean, well, look, we already have autonomous, like most of the commercial planes are flying on autopilot. The great portion of the time they're in air. There's already a ton of that. but you want to make sure you've got it all right. You want to make sure, like, pilots are smart and are learners. You want to make sure that we've got it all 100% right before you do autonomous vehicles, which is the reason why JOBY starts with a pilot. But it's definitely in the screen of the view ahead.
Meantime, Reed, the Senate just passed this $1 trillion infrastructure bill. For JOBY to succeed, you need these vertiports across the country where they can take off and land vertically. Some folks in the self-driving community don't think that this infrastructure bill does enough to work towards their ambitions. Do you think the bill does enough to address the future of transportation as you see it?
Well, I'm always we should be accelerating more and more towards the future. So there's a lot of great things. It's a big, complicated bill. There's a lot of great things in it. The recognition that electrification is going to be so key and central to future of air, future of road, all of the infrastructure, and doing that is really key. So there's a bunch of very good things in the bill. Would you say, asking me as a technologist, saying technology is inventing the future? It's part of how we make American inventions, like JOBY and Aurora, and that we bring this technology to our own benefit and to the world. Obviously, I think we should be doing more. We should be thinking on each of our major problems within transport and generally, like, how can we make technology move faster, deliver better on this, and how do we create the incentives for the market to so do it? Because that's obviously where the future will be, and part of the future and health of American industry is by getting there with robust technology earliest.
Meantime, COVID isn't going away anytime soon. We've seen companies open up, go back into lockdown. You and I have talked about how fundraising has changed. You've funded over the last 18 months some entrepreneurs you've never met in person, which would have been unheard of before. How much of that is still happening now, and how much of that behavior do you think continues even in a post-pandemic world, given what you've learned?
So I think, part of it is these false dichotomies. I think we're both going to continue a lot of the kind of virtual world of work. We can do events, we can do meetings and so forth through these kind of virtual environments. And I think that's now a robust part of the market. It'll affect parts of the industry and education, telemedicine, et cetera, et cetera. I think that was all persistent and here to stay. On the other hand, there's a real value to being in the office together, to building those relationships of trust, to collaborating, to innovation, to brainstorming. And so I think people want to come back. And I think it's what the new blend is going to look like. So it's going to really be both in terms of how it operates. And that will be true in my investing business as well. I think I'll meet more entrepreneurs, in various time zones and geographies, because now we can do it in various ways. But probably when we get to a big deal or an important deal, or we're working to, at Greylock to help build the company, it'll still be important to do it in person. And which investor will an entrepreneur want to go with will probably be the person they have trust with. And part of what we still establish trust is, we had that dinner where we talked about it in depth. And so I think people are really raring to get back to that. Now, obviously, we have to be smart in, not just the Delta variant, but what other future variants will be. And we have to be smart about testing. And hopefully everyone will learn actually getting vaccinated is a good thing. It's part of the science of how we all get through this together. It isn't just your own health, it's our collective health. And so, that's obviously still a lot of uncertainty and still a lot of navigation where we're going in the coming months.
You're also having companies choose to be remote first and remote only. Do you think it's harder to blitz scale remotely? I know you're always focused on speaking to masters of scale. Are they giving something up? Are there some potential disadvantages to achieving that kind of hyper growth that you're looking for in an early stage company?
Well, so I think we haven't yet seen a company completely distributed blitz scale in the real definition of blitz scaling. And part of the reason for that is that there's so much chaos. The very first counterintuitive rule of blitz scaling is embrace chaos. And in order to do that, you have to have relationships of trust, and you have to be able to, you didn't tell me about that. Oh, that was kind of irritating, et cetera. But you have the relationship and the culture to carry you through it. And so that strong and binds of trust and alliance and communication, like water cooler and so forth, is really important to heretofore what we've learned about blitzscaling. Now, that being said, if everyone had to be all remote, then there's definitely its relative speed with blitzscaling, and people could do that in an effective way. But I actually think that what you'll see in blitzscaling companies is they will, generally speaking, they'll have remote offices, remote people, remote work, but they will want to have some very core, like, especially the early days, teams working together, because that's a pattern that we understand how to make work and how to, double the size of your employee base, in a month or 3 months, and actually, in fact, make that work, which, we're still figuring out how that works on, Teams and Zoom and these kinds of environments.
Right. So what's your advice to entrepreneurs and CEOs right now, given that it seems like the playbook has almost been written up? They have a chance to ripped up. They have a chance to rewrite the rules. What are you telling your companies right now?
Well, not to overly generalize on the fact that we spent the last 18 months, kind of at a remote and using all these terms, to figure that actually, in fact, people will want to get back in the office. Matter of fact, I may have been with you that I first kind of started borrowing that Hamilton phrase of being in the room where it happens, which I think is still a very kind of human instinct for these kinds of things. And so don't overly generalize from the last 3 months, and don't overly generalize from the fact that, employees who are may have gotten very comfortable with the working at home arrangements, say, well, that's why I want to keep going. We're in a dynamic times. Things are changing. So experiment and get a sense of it. Don't overly mandate, experiment with A, experiment with B, make that happen. And that's because we're in, we haven't in any time in modern history come out of a shutdown and a lot of remote working and a pandemic and the uncertainties that come from that. And so you have to approach it with a learning and iteration mindset.
Love it. Reid Hoffman, partner at Greylock, LinkedIn co-founder, sponsor of the JOBY SPAC. Thank you so much for joining us. So great to have you back here on the show, Reid. Okay, coming up, Samsung launching its lineup of consumer devices for the latter half of the year. The company positioning itself and its new Galaxy Z Flip 3 as a direct rival to the upcoming Apple iPhone. Our own Mark Gurman has the details. This is Bloomberg.
This is Mark Gurman from Bloomberg Technology, and on this week's episode of Power On, I'll be taking a look at Samsung's next slate of devices, the Galaxy Z Fold 3, as well as the Galaxy Z Flip 3 phones. Samsung first launched its Galaxy Fold a couple of years ago. Out of the gate, it had some issues, of course, involving the durability of the overall phone and the display, as well as complaints about a small external screen. But the concept and usability of such a device was never in question. Consumers quickly learned it was a powerful concept with a large display and enhanced portability. Since the first model, Samsung has launched a square-shaped version called the Flip, and now Apple, Google, and others are still testing their own foldable designs internally. Now, Samsung is launching the Fold 3 and the Flip 3 foldables. Responding to concerns about previous versions, the company says it is upping the durability of both devices. The company is adding stronger aluminum frames, tougher Corning glass on the screens, and stronger IPX8 water resistance across the board. On the larger Fold 3, the company is increasing the display size to 7.6 inches, making it only slightly smaller than the display on Apple's iPad mini. It's doing so by actually embedding the camera into the screen itself. The display is also brighter, the phone is thinner and lighter, and the operating system has new multitasking features. The company is also adding 120Hz frame rate support for smoother scrolling and improved gameplay to both the inside and outside display. There's also now support for a stylus, matching the popular feature from Samsung's long-running Note line. For the Flip 3, the biggest change is a new screen that's 4 times larger, so it's now actually usable. The phone is also getting that faster refresh rate, new video recording features, the ability to more quickly take pictures when the device is closed, and much improved speakers. Besides the smartphones, Samsung is revamping its smartwatch line with new modern and classic models, along with launching the Galaxy Buds 2, its competitor to Apple's low-end AirPods. The new Buds are smaller, and they also have improved ambient sound features. In the US, the new phones are definitely not cheap. The bigger Fold 3 comes in at $1,800, while the Flip 3 starts at $1,000. Still, regardless of price, Samsung is entering its third generation of foldables, while its top rivals are still years away from even launching their first. I'm Mark Gurman, this is Power On.
Thanks, Mark. And that does it for this edition of Bloomberg Technologies. Lots of earnings coming up. We got Disney, Airbnb, DoorDash, SoFi out with results after the bell. We'll have all the reaction and analysis. Make sure to tune in. I'm Emily Chang in San Francisco. This is Bloomberg.